Hey, welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. Thank you, everyone, for joining us again this week as we give you our regular updates on what's going on in the markets and around the world. And today is no different. A lot is happening out there, so let's dive into things. As always, keep in mind that the information we share here is just for your own purposes, not to be taken as advice. Always do your own due diligence, or seek the advice of a professional before enacting any strategy. Your situation may be very different and specific, and we always customize our advice to your needs. So if you have any questions specifically about anything we cover here today, you want some updated information, always feel free to reach out to us. You can reach us at mikeonmoney.com. Or give us a call or email. Happy to have a chat and help you out with anything you need. So before we get started, as always, if you have any questions, you can do so with the little Q&A button. It's usually at the bottom, but you might have your screen configured differently. It might be on the top. Just click on there, type in your question, or if you something you want to ask us afterwards, as I mentioned, you can just follow up with us. If you're watching this on the replay, just fire us an email, give us a call. Or go on the web and you can reach us there. So let's dive into things. What's going on? So, before we get started, I found I was working on the information yesterday to prep for today. And, part of my normal routine is reviewing the news cycle. And of course, many of you, especially here in BC, got up yesterday to another smoky day. And on top of that, the first headlines were all from BC. There was a train derailment. We, of course, had the fire in the New West Pier, and then the Sea to Sky gondola, coming down. So sometimes the news cycle is not that uplifting. So we're going to try to find the positives today as much as we can. But as far as the smoke goes, we had some rain. Hopefully it's going to get rid of it. But stay safe out there. Take it easy outside, especially with the more exertive activities. I know I was out hiking with the dogs on the weekend and started to feel throat. So you just be careful out with all that smoke floating around. Let's jump into things with the coronavirus. So Canada, what we're looking at this week as far as news goes, a couple of things not listed here, as I mentioned before. The news cycle is always changing, but we are looking at the Canada. We're looking for the production estimates for the crops. We're also looking at some more guidance from the U.S. Fed and the Bank of Canada as far as interest rate plans go, or inflation plans go. So we'll be seeing that later this week as well. So just something to keep in mind. What's happening out there with the coronavirus, obviously still going on. Well, we have seen worldwide some of the highest daily numbers coming through. So certainly this has not gone away. Some countries doing better than others. Canada is seeing a bit of a surge. Still doing well. The hospitals aren't overwhelmed yet in Canada. In fact, the numbers in the hospital have stayed pretty flat. Number of diagnosed or test positive has been going up, and of course in the U.S. We're still seeing some pretty big numbers, and we're not into the second week. It takes about a couple of weeks for symptoms to start showing up, and we'll be going into this will be going into the second week of school starting. So hopefully nothing big comes out of that. On the better news, Amazon is continuing their expansion with more and more people shopping online, looking at hiring 100,000 more people in Canada and the U.S. As they build out. Oracle won sorry, some typos there. Oracle won bidding for the U.S. operations, I should say there, the U.S. operations of TikTok. We'll talk a little bit more about that in a second. AstraZeneca, last week we talked about their vaccine trials put on hold due to an anomaly in one of the patients, an unknown disease. They've figured that out, and they're now continuing the trials again over in the UK. Apple's September event this morning happened. I'll dive a little bit into that. I have reviewed the highlights of it already this morning. If you're a tech buff, give you some idea what's going on there. Alaska, funny enough, has now built out one of the most comprehensive COVID-19 testing operations in the United States. I don't know if that's a testament to Alaska being on top of it or the rest of the US being behind the ball. But they do have some great testing going on up there. Unfortunately, it's not one of the bigger spots that the US is overly concerned about right now. Israel is shut down again for a second time due to a second wave of coronavirus. So, we're watching that closely as we are seeing some countries surge again, like Spain, who was hit hard in the first round, are starting to see some pretty big numbers. So we'll look to see if there's any more shutdowns as the world might be going into a second wave. There's a lot of talk around who's paying for all this COVID Medicare. Depends, of course, we're talking in the US because not everyone is insured down there, or the employers, and some plans are exempting it. Even here in Canada, travel, your coverage might not cover you for travel. So if you were to leave the country, even check if you're planning on leaving the province, just double check whether your plan covers you for any sort of travel or out of country movement. Italy is seeking to have economic rebirth. So if you've been following the stimulus packages, the EU, the European Union, put aside about $720 billion-ish. When you're up at those kinds of numbers, 1 or 2 extra billion, I guess, doesn't matter. And Italy's share was about 200 billion, and they're trying to figure out a plan on how they're going to revitalize their economy, how they're going to see growth. They were very hard hit the first round. So far, they're doing okay with the second round, or the potential second wave. But how are they going to invest that money to see some growth? And that's also with Italy coming off of almost 2 decades, or more than 2 decades, I guess, of stagnation. So not really having a really strong growing economy for a couple of decades. And now they want to kind of stimulate it with these new funds. So they're trying to figure that out, and hopefully we'll see some direction, not just out of Italy, but out of all the European countries as to what their plan is for those funds. And then, of course, with going back to school, we're seeing more push from parents and teachers to do the remote schooling or online schooling. And it's great. I mean, I think, I think I was talking with an educator the other day, and I think the education system as a whole, not just in Canada, but maybe even globally, but certainly here in Canada and the United States, has had technology to certainly offer more teaching or more options to people using technology for many, many years now. I even remember this goes back to 2003 when I did my MBA. I was doing remote. A lot of my classes were remote. We did some, concentrated classes in person, but a lot of it was remote learning. So the technology was there back then. It wasn't as good as it is today. But the big problem is not everyone, not all communities, not all families have the ability for, that strong internet service, or even, the hardware, the computers. It's nice to say, some schools, and almost every kid has a laptop, but that's not true everywhere. So, one of the big challenges school boards and schools are struggling with is how do they get those services to either the families, areas who can't afford it, or also, not everywhere has the high-speed internet that we enjoy in the city centers. So we're seeing more and more thoughts and the funds being diverted to that to try to figure out solutions. Other things going on, NVIDIA, if you're a computer gamer, or if you have kids like myself who are computer gamers, you will know NVIDIA. NVIDIA makes, amongst other computer components, graphic cards that are in high demand for video gaming, and they just launched a new, faster, better than before video card that all the kids are very excited about. Or I shouldn't say kids anymore, because more and more adults are playing video games well into their 30s and 40s. I wish I had more time that I could, but I don't. But they just went out and bought ARM, which is a chip manufacturer, which is throwing a big twist into this whole U.S.-China tech battle that's going on. We've talked about TikTok in the past, and how the U.S. is looking at shutting them down, and then we had, of course, the 5G battle that the U.S. is having with Huawei. And now NVIDIA buying ARM, of course, which is in Beijing, is going to put some pressure on the U.S. to figure something out here. So we'll be watching that deal closely. It's obviously good for NVIDIA, but we'll see how it plays out. Tesla, of course, we've talked about it. If you haven't seen, we launched, I think it was yesterday, or maybe it might even been this morning, a video just on Tesla, on what that stock has done. It's an interesting growth story. Not just the fact that it's had incredible growth, but also how it grew. People very bullish and very bearish on both sides, and how quickly it grew without really seeing the underlying numbers. So it's an interesting case study, actually. But right now, one of the big things that is putting off Tesla's shareholders is they did not get picked to get into the S&P 500 index, which is always good for a company because that means more visibility. Also means a lot more liquidity, because a lot of those index funds or index ETFs out there have to go out and buy it now. They have to hold it in their portfolios because, of course, they're buying the index. So one thing to keep an eye on is M&A, because if you have mergers and acquisitions within that 500 index, and a couple of those companies merge, that will create a spot that Tesla could get included into the benchmark. So there was a lot of hope that they were going to get in last week on this last round of inclusions. They didn't, but that might change in the very near future. Hedge funds. So, all those smart hedge funds manager, hey, they finally listened to me, as we've been talking about for a while. The oil outlook is not great, and it's, of course, gotten worse. We'll talk a little bit more about the commodities, but the price, I believe, is below 38 now. It had been holding just above 42 for a while. But more and more, we're seeing the worldwide demand drop, or not recover, I should say. And, and on top of that, we're seeing a lot of countries, Canada included, spending a lot of money, as part of their stimulus packages in renewable energies to move away from oil dependency. That doesn't mean oil's going away. That doesn't mean we won't be using oil. Oil's not just in cars. Oil's not just in planes. Crude is used in plastics and manufacturing and grease, lubricants, and, so many different areas oil is used. All we're saying is that the total demand out there is decreasing as we find alternatives, or more environmentally friendly alternatives to oil. That just means we're not using as much compared to the amount of supply that we have. One thing that's happened with the oil industry, and we've seen this in the natural gas industry, as technology has jumped ahead, the ability to find and get to oil, or get oil out of the ground, has gotten better and better and better. So, we have just more and more access to oil than 10, 20 years ago. So the supply is huge, while at the same time we're seeing a drop in demand. I did a whole video on this back in May. Again, if you want to review that as to why it went negative, but keep in mind that oil is much like coal industry, had already been pegged for kind of hitting maturity by 2030, even the most bullish. So, some of the most optimistic outlooks was saying that the global demand for oil was going to peak around 2030, and then, supply would be outpacing it from then on. And we would get into a situation much like we see with coal, where other technologies are cleaner and cheaper than oil is. So that drives down demand. I think what we're seeing now is that 2030 year was probably a bit, optimistic, and it's much more likely, it's more like 2025, that we're going to hit that tipping point. We already see solar energy, cost-wise, dropping massively, and not to mention, wind and tide and hydroelectric, even natural gas, of course, being so much cheaper, organic fuel cells, costs coming down. So that's kind of our outlook on oil. We've been talking about that for a while. Probably not going to see any strong push in demand for the next year at least, or maybe longer. The Fed meeting may give us some clues as to their job plan. Of course, they're in a recession. I shouldn't say depression. Don't want to scare anyone. They're in a recession in the U.S. The U.S. Fed is going to meet to come out with a job plan. We talked a little bit about this last week, the change in focus, looking more at the blue collar, kind of the lower end of the economy, as how they're going to revitalize that. And it's definitely the way where to go. It's the hardest hit, right? The white collar jobs have not been overly affected. But it's a lot harder to kind of stimulate that bottom end of the lower income job markets, just by pumping money. So they've got to figure out a strong strategy, how they're going to do it, and whoever wins the next election, or whatever party wins the next election. There's a lot of talk about Trump versus Biden, who's better for the market. Really what we want to be looking at, who's better for the economy, who's going to be able to, what party is going to be able to really put a solid plan into place to get people back to work, because the unemployment numbers have come down a bit, but they're going to rise again. We know that, as we see more layoffs happening, and more companies, as the stimulus runs out, decide that they have to cut more jobs in order to save money. That's going to go back up. So, we're probably going into the election with a double-digit unemployment number in the U.S. and Canada. So that's going to be a really, really important part of the plan, and they're going to be meeting, I think it's Thursday this week. Retirements, labor force, layoffs, are causing more problems to the economy, which I was just talking about there. This is an example of a Honolulu hotel where, they had furloughed people, so the non-official layoff. Now they're making it official. We're seeing that in Canada, of course. There was the CERBs, or the government was giving stimulus to companies to continue to pay people, while the work was slow. All that's winding down, so companies are now putting in more and more layoffs, being permanent. Also, the retirements is really interesting. We've been approached recently to do some education for people who are closer to retirement, and that's something we've done in the past, but kind of slowed down, and we're looking at doing it again. So if a company or people that are getting closer to retirement age, and their company or employer might be saying to them, listen, we got to lay people off, but you're 2 years from retirement. We might just top up your pension. We might top you up with a package if you want to go early and make it, try to free up some job space for people who are close to retirement. So seeing a lot of that. Obviously, that's a lot, better, because those people retire. That does not go into the unemployment numbers. Also leaves jobs open for younger people who need the job, or who are working on the economy. And good for the people who get to retire. So it's kind of I don't like the term win-win-win, but it's good for everyone involved. And if you're seeing that, or if you have questions around that, by all means, reach out to us, because we're seeing a lot of that, and it could be very, very beneficial. We talked about the oil industry, the grimmer picture that we're seeing out there. The demand's not coming back, and that's not just North America; it's around the world. And I think that's going to be a common theme going forward. Sequoia backed Snowflake to raise $3 billion, the biggest IPO in 2020. And we're seeing a lot of IPO in the tech industry. So Snowflake is a company, it's a cloud-based data warehouse manager. So of course, these days, everything's cloud-based, and data management is huge. So Snowflake's a firm that does that. And Sequoia is a venture capital firm in the U.S. helping them raise the money for $3 billion initial public offering. So we're still seeing a lot of growth in the tech industry. We're still seeing a lot of money flow into it, and certainly this area, this data warehouse and the data management, is becoming more and more important to companies. It's the way firms really market and grow their business these days. They really tap into, and if you've got one of those loyalty cards, or if you're shopping online, I mean, we've all seen it. You go search online, say I'm looking to buy, a new bike, and then moments later in your news feed, it's, hey, big sale on bikes, right? So that's the search engines that's tracking kind of your likes and dislikes, or what you want, or what you're interested in. And that's that data warehousing and management, keeping all that data and figure out how to use it. So that's huge growth in the tech industry these days. As always, we like to look at the numbers. Sorry, I just want to make sure I didn't miss a page. Nope. We'll look at the numbers around the world. Of course, continue to rise, almost at 30 million worldwide cases. Still approaching that 1 million on the worldwide death. The U.S. basically, and in fact, these numbers, there's always a lag, are probably hitting the 200,000 mark. Canada, on the other hand, still doing well. I mean, as I said, we have seen a surge in the last few weeks on the total cases number. The deaths, not as much. As I mentioned, the hospitalization numbers have been pretty steady. We do see some spikes here and there, but so far Canada still doing well by comparison. But of course, none of that part is great news. So let's take a look at where we are today. Just recently, the stock started to rise again. We did go through 2 weeks of decline. So, last week we talked about the market being down a little bit. A lot of it around the tech center. We're going to talk a lot, the different sectors here performing in September, both here in Canada. But we did see 2 weeks of decline. That pullback was not unexpected. We've been talking about it. There still might be a little bit more, movement as far as that goes. Just as we see some profit taken, especially in the tech side of things. Also, the market's adjusted a bit to the economy, not growing back as fast as the markets came. That's okay. We're kind of expecting that. In the U.S., on the economic calendar, we are looking at industrial production numbers. Probably see a bit slightly increased capacity utilization, slight increase, and that's just as the economies reopen. So these numbers are great that they continue to increase. We have seen them plateaued a little bit, meaning that they're not grown at a pace that they obviously declined at, and that's just that slow reopening and a little bit of stagnation when it comes to the confidence out there, people buying things. There's a lot of essentials still being bought. Yes, the online people are still getting, online businesses are still getting a lot of upticks as their numbers start to grow. But really those luxury or splurge items aren't taking off. That being said, as I mentioned, Apple had their big announcements. So they do this usually once a year, sometimes twice a year. Definitely they like to do one in September to get all new products out before the holiday season for people to go out and buy presents. So they had their special event this morning. I won't go through it all. Not everyone's a techie, but, a couple of things. One, they came out with a new Apple Watch, which is, if you like tech, it looked pretty good. Some new health benefits to it. But really what I found interesting, and I actually had a big conversation with some of our tech analysts the other day. We were just looking at how, when we say technology, a lot of people think computers, games or softwares, but, technology, of course, affects all aspects of our lives these days. And we were just brainstorming around different industries that are modifying and changing the ways they're doing things because of the pandemic, but also moving forward. And, one of them, of course, we've seen the food industry move into a delivery. The pre-made meals kind of is a new offering from a lot of restaurants. And actually a lot of restaurants owners, despite kind of the reopening happening on a limited basis, of course, a lot of them are turning to that platform and saying, hey, we're making a lot more money just doing delivery and the meal packages or the meal kits than we do with in store dining, and so because of the extra staff and everything and overhead to carry the space. So they're really, reshaping the model as to how big the restaurants are going to be, how much is going to be in dining, how much is going to be out. We've seen, these kitchens now, who might service 3 or 4 restaurants for delivery service. So the kitchens, they're not storefront, they're not expensive storefront. They can be in a basement, they can be on the 2nd, 3rd floor. They don't have to be in prime real estate. They just have to be central, and they cook, the same meals, same type of food, all the same supplies, and it's just a takeout. Like, it's just a delivery. So you skip the dishes or door dashes are going to pick it up there and take it to your home. So a lot of efficiency in that and a lot lower cost. So using that as an example, we were brainstorming other areas outside of the tech industry that are remodeling, and one of them I brought up was the fitness industry. Of course, gyms had to close. Many of them closed permanently. Some of them have started to reopen, but with limited capacity and also limited interest from people. And one of the companies we saw do quite well is Peloton. And if you haven't followed Peloton, that's that online trainer kind of attached to a bike, but an indoor bike that you work out. You have a trainer. You can do live classes. You can do recorded classes. You can also they have everything from yoga to running to weightlifting. It all depends on the amount of equipment or where you want to use it. But they offer this service for a monthly fee. So instead of going into the gym, you would have access to that. And Peloton's done quite well in sales as more and more people had to look for fitness at home. And now Apple, one of their announcements, came out with Apple Fitness, which is basically that, which is an online fitness where you can put it on your TV, you can have it on your watch, you can have it on your phone and your iPad or wherever you want it, with the trainers, and you just pay one monthly fee and you can use it as much as you want. So I thought that was really interesting. They came out with some new iPads. What else did they came up with? I think those were the big ones. There was no new iPhone. Yeah, I think that was pretty much kind of most. I think they came with some different packages that you can buy their services as well. But overall, you can go on their website now if you want to watch the full video or recap. Anyway, they came out with a bunch of items. I'm sure there'll be hot sellers for the holiday season. And as I mentioned, the U.S. Fed is meeting later this week to talk about interest rates and their plans there. Also, TikTok, we talked about this. ByteDance, the parent company of TikTok, is looking to sell to Oracle, or I shouldn't say sell. It's kind of a service agreement, kind of to, it's not fully vetted yet. Remember, this has all been triggered by President Trump saying that he was going to outlaw or ban TikTok in the U.S. unless they sold to a U.S. company for security reasons. So Oracle and ByteDance have come up with an agreement. It's not really a sale, but kind of moving the data out of China into the U.S., which would kind of get rid of the security concerns. We're not sure if we don't have all the details of that partnership that they've put together, but also we don't know if the U.S. government's going to accept that. Or they're going to force an outright sale, or they're going to go ahead with the ban. We don't know, but so that's the latest development. Microsoft was kind of one of the forefronts of the outright sale, but it looks like they're off the table for now. Verizon also, so a lot of M&A out there, a lot of acquisitions. Verizon went out there and bought a prepaid mobile service called TracFone, which is a unit of Mexican telecom giant American Mobile. For a cash and stock deal. So this is just expanding their prepaid mobile services. Gilead went out and bought a potential cancer treatment, a very promising drug to expand their lines. Another 21 billion as they're looking to add more revenues down the road with that. And Delta Airlines went out to raise $6.5 billion, basically leveraging the Sky Miles, the loyalty program. So they issued some bonds and loans backed by that separate company that they own. Sky Miles. So this is equivalent of, if you're playing Monopoly and you run out of money and you start mortgaging your properties. So, Delta is kind of burning through their cash. They're looking for more cash to get them through, obviously, this difficult time for them. So they've gone out and raised $6.5 billion by leveraging or mortgaging one of their properties, specifically the Sky Mile program. So we actually saw Air Canada do that years and years ago with Air Miles. They ended up selling the Air Miles because they really couldn't afford that debt in the long run. Sold Air Miles as to a separate entity, which they recently bought back just last year. So full circle, it worked out for them. They did go through bankruptcy protection in the process, but we'll see how Delta fares with this latest raise. Canada, as I mentioned, we're looking at some data coming out this week, factory sales numbers coming up. Also in Canada, which didn't make my headlines here, but MEC, Mountain Equipment Co-op, has been bought out by an American firm. It's interesting. You see a really local story or a Canadian story. It wasn't bought out by a U.S. retailer. It was bought out by an investment bank, so private investors. So no real news on any potential changes or modifications that they're going to make to the brand, or whether they're looking at acquiring some other names and merging them down together. Usually, that's what you see from investment firms is they'll pick up, 2 or 3 different distressed brands, put them together, and try to create something a little bit more profitable than any one of them on their own. So we'll have to follow that story a little bit. Also, Canada's came out to put new tariffs to fight with the U.S. on the U.S. put in tariffs on our aluminum industry, and it looks like the U.S. might actually back down on aluminum. They have so many battles going with tariffs, they probably just think Canada's too small to worry about it. But good news for the Canadian aluminum industry. It looks like that's going to ease off. Also in Canada, Pascal Biosciences has struck up a partnership with Source. So Source is a cannabis-based company that does cannabis drinks, cannabis-infused water, and other drinks. And they're working on a cancer therapy, which is good news. The cannabis industry, of course, has not been doing well in the last year, really. A little bit of an uptick through the shutdown as some more recreational users maybe picked up their activity, but it certainly hasn't been a great story in the last year. On the currency front, U.S. dollar, slight weakness to the basket of securities it's put against. The Canadian dollar actually dropped slightly from last week. I think we're about 75.60 or 75.50, somewhere around there. But a little bit a weakness on both fronts there. The euros continue to trade comfortably, as the European Bank is putting policies in place to recover their economy. It's been holding steady, but there is still that Brexit thing happening, and there's still some concerns as to whether it can hold at this level in the long run. In Canada, again, really, we're pegged against the U.S. We're watching the U.S. dollar. While it has been weakening, so we've been holding in there, but with oil being low, our currency really moves on oil. So we'll have to keep an eye on that to see if we see the Canadian dollars drop any further. Probably not immediately, but it's something we'll keep an eye on over the next couple of months. Oil, we've talked a lot about oil already. As I mentioned, the oil's trading just below 38 right now, 37.70, 37.60 last I looked. So, weakness there, not a lot of pressure, upward pressure. Gold's upticked a bit. Nothing really strong, just steady every week. We seem to say it's been moving up marginally, and that's just on the continued inflation pressures that are coming from all the stimulus packages. So let's take a look at what's been doing well in September, because we have seen a shift. So if you remember through most of the summer, or certainly since March when we saw the lows, it's been technology's been at the forefront of the best performers. And we've mentioned that there's probably a lot of overbuying in that area, a lot of overvaluations, and kind of giving recommendations to ease off. Healthcare being another one. We've talked about it. All the money pouring in as people are speculating on the vaccine, treatments or COVID treatments and vaccine development have been two big areas. And what we've seen in September, and this is just last week, but it's really the trend that we're seeing in September, is a bit of a reversal there. And, it's kind of consumer staples have taken the forefront. So as I mentioned, people are worried about jobs, people are worried about the economy. So they're focusing their spending on consumer staples. So these are your grocery stores, your utility, just moving away from those discretionary items and more to kind of what the actual needs as opposed to just wish list items. Materials, we're seeing move there. That's gold. That's your base metals. That's been moving for a while. We've been talking about gold. Industrials, we have seen a bit more uptick as the manufacturing are picking up and things doing better. Financials are finally starting to move. As I've mentioned in the past, I think financials are great positions, especially Canadian ones, very strong dividend payers. They haven't rebounded like the rest of the market since the March lows, mostly on the loan loss provisions. Every time a company or someone gets into financial hard time, well, if they owe money to the bank, of course, the banks, have to write that down. So that comes right out of the earnings. So there's been a lot of that as banks have been writing down loan loss provisions. So they don't just wait until, they have a loss. They actually try to estimate ahead, saying, okay, we expect in this next quarter, this is how much we're going to have. So we're going to write that down now, and hopefully that, the number is pretty close to that or under that, or slightly over in most cases. But they've been writing that down, and it's been pretty good. So the financials are just starting to move. I do like the financials in our portfolios. We just today kind of beefed up a little bit of financials in the portfolios because we do see that as a strong recovery area moving forward. Consumer discretionary is still holding in there. A little bit of growth. These are a little bit of the online luxury spendings, your Nikes, your Lululemon type of things. So a little bit of growth, not much. In utilities, of course, slow and steady. IT, technologies, I mentioned, lost a little of that ambiance of people wanting to just pour money into it. We're still seeing money flow, but at a much lower rate, and we're seeing a lot of profit coming off the table. Real estate, of course, especially on the commercial side, when we talk about retail, restaurants, office space, we're seeing that starting to pull back. Energy, there's your oils, of course. Communication services, I think that one's again just a bit of overvaluation. So your TELUS, your Bells, your service providers. Still think it's a good area. I think there was just a little bit of overvaluation. And healthcare, a couple of things there. Overvaluation, of course. President Trump signing a executive order to force drug manufacturers to charge less. Been a long time story, of course, that in the U.S. Drugs or medications are much more expensive than other countries, especially compared to Canada. So some governmental pressure there to push that down, which has been a huge Democratic issue for years and years and years. Not been a big Republican issue. Of course, it is now that an election's coming up. So let's take a look at some of the individual names. Tech Resources, that's mining, Hudson Bay Minerals Mining, Empire Co., Precious Metals. So that's all your materials that we see up there, the golds, pretty much right down to Cascades, where when we get into Cascades, which is kind of your pulp, paper, Westmill Timber. CAE, actually a name we really like. They play, they're kind of in the airline industry. They do a lot of, they make simulators and do training for pilots and for medical professionals on the equipment. We do like that story as a recovery story. They do a lot of regional airlines. And of course, we do see travel coming back more in the regional front. then on the international front for the next little while, as people might travel within Canada, for example, maybe around the province, but not necessarily going overseas to the same volumes that they were. So we do like that story. And Interfor again into your forest products. So very heavy on the materials, on the gainers. On the losers, cannabis, we talked about that. It's funny, I've been saying cannabis has been a bad trade for a long time, even while people were making money in it, because there was just way too much money pouring into it, creating way too much crops and demand, and also the cost to grow it here in Canada being a big challenge, given that we do have 4 seasons here where it can be grown in other climates where it's not a big of issue. So of course it has to be greenhouse grown, which is more expensive. Quality control is harder. Really since the end of last summer, we've seen the cannabis industry kind of had a lot of pressure. As I mentioned, we had a little bit of recovery through the COVID shutdown as people started using a little bit more, being at home, being a bit more trying to, I guess, kill time or calm the nerves, whatever the reason people might have been using it, just recreational, medically. But now we're seeing, again, that come off as, profitability is just not there. And we've already seen a lot of closures, a lot of bankruptcies, a lot of mergers, but there's still a lot more to come in that sector. Gold front, you might have heard, we have a gold name in there. There's been some trouble in some of the mines with collapses and things. So not all the companies are protected from that. Crescent Point Energy, been a success to ruin story. I mean, Crescent Point, I remember it was at $40 a share, and now $1.83. Cineplex, of course, the movies being hit hard. Husky Energy, restaurant brands, some manufacturing. Carries an interest in one. That's a kind of a natural gas pipeline or prep for pipeline. I've always liked that company. Obviously not the time to go in there right now, but maybe something down the road. Brookfield Property, again, real estate, and Shopify. Shopify just in profit selling. Still an incredible story. I'm not one to buy just because the valuations to me are way too high. If you follow me on this, I prefer to buy, invest in Visa, MasterCard, or PayPal, or all 3 actually we have in our portfolios. Because if you're shopping on Shopify or Amazon, you have to pay with those payment types, and I just find them a more diverse and safer bet. But Shopify has been an incredible story, as well as Amazon from an investor standpoint, and continues to do well. So some profit taken there. But it's not a story that I have the nerve to buy at those valuations in case something changes. So let's take a look at the U.S. Not a big difference. Materials, industrials, financials. Healthcare held in a little bit in the U.S. Healthcare in the U.S. is a much more diverse industry. Consumer staples, again, are up there. Discretionaries, communication services, the numbers are lower. Energy. But then information and technology, not in the negatives in the U.S., however, not at the top anymore. So we did see that inversion in the U.S., just not as much into the negatives. We are seeing the real estate having a pullback, and utilities still not performing as well. Utilities aren't as regulated in the U.S., so a lot more fluctuation as far as profitability goes. The names are seen there, aerospace. So these are the part makers, for the planes. So, not as many plane orders going in, but the ones that are flying, of course, they want to keep them running. So, some good gains there. Technology, Under Armour, I've mentioned Nike and Lululemon. Under Armour's right in there. So people wearing comfy clothes a lot more than buying suits these days. Freeports, Vulcan Materials, petroleum, Marathon Petroleum just had a spike because they had a big fall previously on the storms coming in as they reopened. Invesco, investment company, technology, and Holly Frontier. So not your common household names down in the U.S. as far as the gainers. Again, bit of a shift in the markets. And same picture saw in Canada as far as the losers, hotels there, restaurants. Norton LifeLock's an interesting one that's they do protection for identity protection online. Realtors, Regency centers is your kind of malls. So a lot of realty in there. In almost all of them. Norwegian Cruise Lines, of course, Expedia Travel, not being there. Ultra Beauty, I think we mentioned it last week. That's one sector that's not surprising, but we're starting to see some bigger drops in their earning numbers as people aren't going out as much. People aren't spending money on beauty products to go out. They're putting on their sweatpants and pajamas and relaxing. So good for them. So not a big change as far as what we saw in the U.S. And Canada. But there is that shift. There is that mindset that technology has probably got a bit overvalued. So we've seen some pullback. That doesn't mean that we think that the names are bad. In fact, as we've said, I think there's some great opportunities in technology. Pick your right one. Pick the right ones for you. Pick the right entry points as far as pricing goes, and definitely take a longer term approach, because we're probably going to continue to see some volatility here as we get into the fall, and that's what we've been talking about through the summer. Is a lot of economic numbers come out in September, and we kind of had the markets ahead of those economic numbers, getting a little too overvalued, and we're just seeing that adjustment. That's a great buying opportunity if there's a story you like. If you'd like to see what we're doing in the portfolios, by all means, give us a call. Reach out to us on mikeonmoney.com. Happy to help you out in any way we can, and with any questions that you might have. With that, let me just see questions. No, we're good. So with that, a few minutes over here for today. I know I rambled on a bit. There's just a lot more news and a lot more things happening. But as always, thanks for joining us. If you have any questions or ideas you want to share with us, check out our video on Tesla. You can find that at mikeonmoney.com or YouTube channel. If you want to forward any of these to anyone, feel free. We're always happy to share. And with that, enjoy your day. Stay safe out there with all the smoke, and we'll talk to you next Tuesday. Thank you very much, and take care soon.